We all know that the housing market has been changing over the last 6 months, but we have still been seeing a positive year-over-year home price appreciation. Until now. Our year-over-year median home price appreciation hit 0 in November, and in the first few weeks of December, we have already gone negative. But before anyone says, this is it, prices are going to drop like a rock, we are going to see short sales and foreclosures all over the market again, I want to show you a few charts because this news is going to come out about the Arizona housing market, and I want to make sure that you have the best information. First, let's take a look at this chart to see where our median home prices have been and where they are going. As you can see, for the last 2 years, our prices have been rising rapidly at a pace that we all knew could not be sustained. But this was not unique just to the Phoenix market. The Phoenix market was, however, one of those markets that saw some of the largest home price appreciation, coming in at around 57% over the last 2 years. So something that I just want to point out is that you'll hear in the news and you'll read in articles that the peak of pricing hit in June. Well, here in the Phoenix market, our peak pricing actually hit in May. And most analysts are saying that we're going to see further price reductions. And the question always comes up, well, by how much? And while I don't disagree that we are going to see further price reductions, that how much piece is really dependent on the interest rate. And that one is anyone's guess. But this is why I wanted to show you this chart. So when we start looking at our median home price appreciation, you can see that it has come down. Here's that peak that I was just talking about. This was in May and we peaked at 480. We are now back down to 420. And this is just in the first week into December. So I want to show you November because this is when we hit that 0 mark of appreciation. So in November, our median home price was at 425. If we go right across, we see November of 2021, 425. So we were at a 0 appreciation from year to year. So now, how do we get negative? So right now in December, again, we're just early in December, we're at 420 in 2022. And in 2021, in December, we were at 430. So we are now at a negative appreciation year over year. So the next thing people always ask is, well, how much have we dropped? Like how much has our home price appreciation dropped? So from peak to trough right now, we are at about an 11.5% decrease in our home price appreciation. But here's what you have to pay attention to because this number is going to change. Now, even if we stay flat, this is what I want to show you. Even if we stay flat on our pricing, what's going to happen is that this number is going to come out. We're going to say we stay at 420. The problem is that we kept rising here. So this number, our home price appreciation number, that 11.5% that I just talked about, regardless, if we stay flat, that number is going to get larger. But the thing to note is that doesn't mean that our prices are falling even farther. Now, you might hear people talk about the average price per square foot, and on that metric, we are actually not negative right now. We are still seeing a 4.4% positive increase in our home price appreciation when you look at that metric. This is really just a difference of looking at averages versus medians, but it is still a good metric to look at. So if you take a look at the percent that is actually dropping every month, which is about 1.5%, in 3 months, we would be at about 0. So we will see that same metric, that same negative number come into this price per square foot in about 3 months, but it's going to be the same thing. If we remain flat, it will start to increase that negative number, even if it stays flat, purely because of how quickly our home prices and our price per square foot numbers rose. So Ivy Zellman of Zellman & Associates said this: if we don't see any type of improvement in the economy and rates are higher than 6%, then I think you're going to see pricing continue to decline nationally in the magnitude of 20%. Now, she is one of the analysts that's on the high side of what they're estimating the declines in the market will be, but she believes also that those markets without supply constraints could see declines in the single digits. But she said that their health is largely dependent on the economy's trajectory. So let's take a look back at that median sales price chart. So let's just say we do decline by 20% from where we are right now. We're at 420 right now. 20% decline from that would be at 336,000. That's going to take us all the way to December of 2020, which means that we would erase all of that home price appreciation that we saw in 2021. So we would erase all of 21, all of 22, and we would be back to 2020 pricing. Now, I wanted to point this out only because I continually get comments on my channel about prices are going to go back to 2018 and 2019. And you can see this, even if we reduce our prices by 20%, it is still not going back to pre-pandemic pricing. With that said, thinking about 20% reduction in your overall home price doesn't sound great, especially if you're wanting to sell. But keep in mind, The majority of the homes that are on the market right now, 65% of them actually, have been owned for more than 2 years. If you've owned your home for more than 2 years, you have at least a 32% home price appreciation in there. So you are still not in the negative. And now for all of those people that are saying that foreclosures are going to come back into our market, let's take a look at that chart. Okay, so here are our notices of trustee sale. This means that they're 90 days late, they've gotten a notice, and a lot of other things has to happen before it goes into a foreclosure. And a lot of these actually come out of pre-foreclosure. But let's just take a look at those in pre-foreclosure right now. We are all the way down here. So our number for November was 273. Prior to the pandemic, we were at 388. So we're still not even at pre-pandemic foreclosure levels. And for anyone asking what this is the moratorium when no foreclosures could be done during our pandemic. So that's why that's so low. It did pop up. So don't be surprised too when you start hearing these foreclosure headlines saying that it's up by 200, 300%. That's because down here we had 83 and we did jump. So if they want to try to skew the numbers, they can give this huge percentage, but still the numbers were just not there to see this huge influx of foreclosures come to the market. So what's keeping us from repeating 2008 besides the fact that we do not have the predatory lending that we had then? Well, we don't have inventory flooding our market. Sellers in 2008 had to sell. We are not experiencing the same things today, and we don't expect to. The fact that so many homeowners have so much equity in their home and a low interest rate is keeping them in their home unless they absolutely have to move. In turn, this is keeping our inventory down, which is limiting the amount of downward pressure being put on pricing. Now, with interest rates that have come down for the 4th straight week in a row, we have started to see some of the demand come back into our market. But it's interesting, I also see the headline saying that interest rates have come down, yet we don't see the same amount of demand. We are not seeing the same levels come back. To that, I say we are right in the thick of the holiday season. Buyers and sellers are just not focusing on buying or selling a home right now. This is seasonal. It is normal. When we get into January, this is when we will be able to determine how much of the demand has actually come back into our market. If our interest rates come down and even continue to come down just a little bit more, this will bring buyers back into the market, just like we saw in July. To what degree though? That is the unknown. One of the hardest things for buyers right now is that even though our home prices have come down and our inventory has gone up, we still don't have a lot on the market. And homes that are priced well in great locations and really well maintained are still selling quickly. Now, they're not getting multiple offers, but they are selling quickly. Now, I have talked about the Cromford Market Index on my channel before, and this is something that tells us if we are in a buyer's market, a seller's market, or a balanced market. And while the overall Phoenix market is in a buyer's market, each individual city is reacting to this market differently. So as you can see from this chart, there are a few cities that are still technically in a seller's market, anything from Paradise Valley and up, but they are in a very mild seller's market. Now, what's really interesting is that even though we're in the 4th quarter, in our normal seasonal slowdown, the number of green arrows that we see on this chart has actually doubled since the beginning of December. And many of the other cities that still have a red arrow are actually slowing their decline. And because of all of this, the overall CMI has actually stopped declining and actually risen a little bit. Now, I am in no way saying that our market is turning back into a seller's market, nor am I saying that the prices are going to start rising. I am only pointing this out so that you can see that we could have reached a balance in our market. This could be a place that we hang out for a little while, a little up, a little down, but overall just staying balanced. All of this to say, do not be surprised when you hear in the media that Phoenix home price appreciation is now negative, but understand what that really means. We are not falling off a cliff with pricing. However, even if home prices stay flat, our home price appreciation number is going to be negative and likely get larger. Now, if you like this video, take a look at this one. And if I can answer any questions for you, please feel free to reach out. As always, I thank you for watching and I'll see you next time.